Morning, students. This is the accountancy class, and we were doing partnership, introduction to partnership, and today is the seventh class on this chapter. So, in the last class, we had learned about the partner's capital, and we had learned that there are two methods of making partner's capital account: fixed capital method and fluctuating capital method. So, we made an example on fluctuating capital method, and in today's class, we'll also solve an example on fluctuating capital method, but this time with profit and loss appropriation account. We'll make PL Appro and partners capital account, and if there is time after that, we'll discuss fixed capital account. And not do the illustration we'll do it in the next class. Okay, just look at this example. Rat, cat and dog started a partnership firm with capital 80, 1 lakh and 120. Interest 5%, drawings 8%, monthly salary 750 and 1000 per month. Monthly salary. Rat is entitled to a commission of 8% on the net profit after charging such commission. So Rat is entitled to a commission of 8% on net profit after charging such commission. So you know what do you have to do when they say before charging such commission and after charging such commission. Suppose the net profit is 50,000 and they said Rat is entitled to commission before charging such commission, then 50,000 into 8% divided by 100. But since they have said after charging such commission, then 50,000 into 8% by 108. It's nothing very rocket science, it's very simple. Before and after charging commission is quite simple. Just when they say after, you just write 8 by 108. Before 8 by 100. Now, last 20% of the distributable fund is to be transferred to the reserve fund. Okay. So 20% of the distributable profit. Now, what do you mean by distributable profit? It means that all the other expenses, all the other income and expenses of the PL appropriation account, when they have been recorded, and suppose the net profit is 1 lakh, interest on drawings 5,000, just an example. So net profit 1 lakh, interest on drawings 5,000. Now interest on capital 7,000. Okay, remuneration 20,000 and commission 3,000, for example. Sorry, 3,000. So 1 lakh plus 5,000 is equal to 1 lakh 5,000 minus 10,000 minus 20,000. How much? 1 lakh 5 minus 10, 95, 95 minus 20, 75. So my distributable profit is now 75,000. On this figure of 75,000, on this figure, we'll charge a commission of 20%. Okay, on this figure of 75,000, a commission of 20% will be charged. So it is equal to 18750. 18750. Okay, we'll this 75,000 is not to be written over here. This is just for the rough work. This is rough work example. And 18750, and after that 175,000 minus 18750 is equal to 56250. This is the final distributable profit. 75,000 was the distributable profit before charging commission or anything else, and 56250 is the final distributable profit after the commission has been charged. Okay, so this illustration is a full-fledged example on what comes in your higher secondary exam. You can expect sums like this in your exam. Okay, On 31st December, PL account disclosed profit of 86,400. Drawings were 8710. Prepare profit and loss appropriation account. So let's make a format. So profit and loss appropriation account. So first we will write the net profit. By net profit, the first step I've done the whole sums, but I'm explaining it to you step by step. By net profit 86,400, the first thing to write on your notebook. Then to interest on capitals. How much were the capitals? 80,000, 1 lakh and 1 lakh 20,000. So was there any addition or withdrawal of capital? No. Then very easy. 80,000 into how much percent? 5%. Into 5%, 4,000. 1 lakh into 5%, 5,000, and 1 lakh 20 into 5%, 6,000. Add up the total in the outer column, 15,000. Next thing we write is partners remuneration. Partners remuneration include everything: salary, commission, bonus, everything is included in partners remuneration. Okay, so cat gets a monthly salary of 750 per month. 750 into 12, 9,000. And dog, he gets a salary of 1,000 per month, means 12,000. So 9,000, 12,000, but don't send it in the outer column yet. There's one more thing. Rat is entitled to a commission of 8% on the net profit after charging such commission. So what happens here? What is the net profit? 86,400 after charging such commission. 86,400 into 8 by 108. 86,400 into 8 divided by 108. 6,400. So I'm doing it very roughly. You will have to make a separate working note for it with the name of rat's commission, and there you'll have to show the calculation. So 6,400 transferred over here. We write it over here. Then the next step is, now let's come to drawings. So in the PL App Pro credit side, we do not write drawings, but we only charge interest on drawings, which is charged from the partners, and it is an income for the partnership firm. So how much were the drawings? 8,000, 7,000, and 10,000. So have they given a date for the drawings? No. So if they haven't given a date for the drawings, what do we do? Suppose 8,000 and interest rate is 20% of the distributable profit, right? Nothing before, not after, no hassle. So 45,000 into 20%, simply, nothing else. 9,000. So we will write 9,000 over here. 9,000. Now the distributable profit will be calculated. How? Again, add all the credit side, add all the subtract all the debit side. Here we know the uh, sum, the difference. So 45,000 minus 9,000 is equal to 36,000 is my distributable profit. 36,000. Now if you see carefully in the sums, they have not mentioned a profit sharing ratio. So whenever a illustration or some problem does not mention the profit sharing ratio, the profit is distributed simply equally. So 36,000 divided by 3 is equal to 12,000. 12,000 and 12,000. I'm sorry, I just lost track of where was I. So please I apologize if I repeat myself. So I was saying that the net profit is the distributed profit is 36,000, and if the profit sharing ratio is not given, we distribute the profits equally. Okay, net distributable profit. Now while making the partners capital account, now we make the partners capital account. This is the format. The first thing we write is by balance BD, that is the opening capital of the partners. So rat cat and dog, they all have a separate column on both debit and credit sides. So when we record the capital, then we write the items, all the items that increase or decrease the capital accounts of the partners. So by interest on capital, we take it from here. We don't calculate anything, we just take it from the PL appropriation account. By PL interest on capital, 4,000, 5,000, and 6,000. Next, by salary also increases the capital account of the partners. So under rats column we have given a dash because rat is not getting any salary. Under cats and dogs we have given the salary 9,000 and 12,000 respectively. Now by commission, now rat isn't getting a salary but he's getting a commission of 6,400. So we record it over here, and they are not getting anything, so dash. Now B by PL appropriation account. Now whatever the profit or loss is earned by the partners is recorded in the partners capital account. If there is a profit, means the capital account is increasing, so we record it on the credit side. If there was a loss, means the capital account will decrease, it will be recorded over here. Okay, so the profit was 12,000 for each partner, so 12, 12, 12 recorded over here. Now coming to the debit side, there are two things over here that decrease the capital of the partner. First, when the partner withdraws capital in the form of drawings, and second, when he is charged interest on capital, in interest on drawings. So the drawings was 8,000, 7,000, and 10,000 respectively, and the interest on drawings as we calculate over here, 320, 280, 400. We just have to recall it over here, simply nothing. Now what do we do? Now when all the items have been recorded in the partners capital account, now see which side is more, debit side or credit side. Okay, obviously credit side is more, so do the total. Done the total of each side. Now when you have done the total of each side, you copy it to the debit side. Copied it to the debit side. Now subtract the debit side from 1,02,400. So 1,02,400 minus 8,000 minus 320. We have to do this for balancing, right? For balancing both the sides. So 94,94,080. Okay, so there is some glitch in the word thing. When there's no space, it happens. So it's better that you copy it before I write 94,080. Now cat's capital. Coming to cat's capital, 1,26,000 minus 7,000 minus 280. So 118,720. 118,720. Now coming to dog's capital, 1,50,000 minus 10,000 minus 400. 139,600. 39,600. Okay, so this is rat's capital, this is cat's capital, and this is dog's capital. Now understand, this is the capital at the beginning of the year, this is the capital at the end of the year. Now when we make the balance sheet for suppose 2019, suppose these are the things for 2019, when we make the balance sheet, we write down this capital, right? When we make the balance sheet, we record this capital in the balance sheet. And again, when we make partners capital account in the next year, in the year of 2020, what do? This This one is transferred over here in the next year, not in this one. In the next year, this amount is transferred to buy balance BD 94080, 1,18,720 and respectively. Okay, so this was the partner's capital account. Take your time and understand it. If you want to see, watch the video again, and if I have made any mistakes that is confusing you, then I'm very sorry. Okay, now we have some time left, so let's just discuss the fixed capital method account, and we'll make the illustration in the next class. So we discussed the fluctuating capital method account. Very simple. Everything was simply recorded in one account. However, in fixed capital method, there are two accounts to be made. Nothing different. Very simple. Very easy. It's just that if you don't know, you don't know. So it's better that you know. So two accounts will be created: partner's capital account and partner's current account. Now the partner's capital account will deal with only the capital transactions. For example, the opening capital means this one, this 80,000, and this one, this will be recorded over here. Okay, in the partner's capital account we record for suppose x and y, 80,000 and 1,20,000, we recorded over here, opening capital. Now if the partner is now in this account, no other transaction is recorded. The transactions such as interest on capital, salary, commission, those are not recorded in this account. Okay, in this account it's just what is recorded is any introduction to further capital or any withdrawal of capital. Okay, withdrawal of capital is different from drawings. Okay, there are two types of drawings. First, the withdrawing of capital, and second, withdrawing of profit or withdrawing of cash by the partner. So there's a difference between two things. Withdrawing of cash from the profits is recorded in this account. However, permanent withdrawal of capital, what did I say? Permanent withdrawal of capital is recorded in this account. So when the capital increases, credit side; when the capital decreases, debit side. So opening capital over here, introduced capital, withdrawn capital, and here closing balance of capital account. Simple. Nothing else will be recorded in this account. Where will it be recorded then? It will be recorded in the partner's current account. Another account will be made with the name of partner's current account. Now this account, it can have a debit balance and it can have a credit balance. Normally partner's current account should have a credit balance. But suppose if any partner has made excessive drawings, his capital account can be in the debit also. Means his balance in the current account is already negative. If the balance is on the credit side, means he has a positive balance. If the balance is on the debit side, means he has a negative balance. Okay, so whatever they say, if they say Ram has in the current account 15,000 credit, so we record it over here. Then it says Sham has 20,000, 10,000 bracket debit, so we record it over here. Simple. Okay, partner's current account can have a credit balance and it can have a debit balance. So if it has a debit balance, just write it on the debit side. If it has a credit balance, just write it on the credit side. And the rest is very simple. We record all the transaction that we recorded here: interest on capital, salary, commission, PL, APRO, and drawings, and interest on drawings. Okay, and the last thing will be buy balance CD. It can be credit, it can be debit also. You'll be more clear when we solve the example, and I have the example ready. Mhm. Yes, this is the example that we'll do in the next class. So if you are never mind. Thank you, and that's all for today.